Okay, viewers, welcome back, traders. So the next pair we'll be looking at now is the Nasdaq. So as you can see, the Nasdaq is in a range with 200 EMA moving sideways. So guys, the market moves in two ways. It's either is trending either to the upside or the downside, or it's moving in a range known as the sideways market. So the Nasdaq is moving in a sideways market. So I trade the sideways market differently. I have a mean reversion strategy that I use in trading the sideways market. It's not, the trend pullback strategy. It's a mean reversion strategy. I had to develop this strategy because the market does not always trend. So if you're only trading the trend pullback, what do you now do when the market is moving in a sideways? And these are the two scenarios that you find in the market. So for the sideways market, I use the mean reversion, the trend a reversal strategy. That's what I use to trade the sideways market. And what are those things that makes me to know that the market is in a sideways? You can see there's a clear supply area here. There's a clear demand here. Here's another supply, and there's a demand. So when the market is trending, you don't get a supply and a demand. You get maybe for an uptrend, you get maybe a demand area. But if you are getting supply, you are getting demand in the same period, it means the market is ranging, and you see the 200 EMA moving in between the price. Then see the 200 EMA just moving in between the price, and we have a supply here, we have a demand. Price drop all the way from this point. It got to this point, move back up, range a little bit, come to this previous resistance area, use it as a supply, came back down from there, start moving up. So at this type of market, what I do is very simple. I just wait for the price to come back to the area where it has moved initially, and I take my entry from that point. Very simple. So it's a strategy that involves a lot of patience, because you have to sit in your hands almost all the time and you do nothing. You have to sit in your hands almost all the time and you do nothing. You have to sit in your hands almost all the time and you do nothing. So the market got to this supply area, I came down, got here, went back up, and from here I started coming down. So what I think the market is doing is that I think the market is still going to come back to this area. It came here, went up. It might go up from here anyway, but if it doesn't come down to this place, I'm not doing anything. So I'll be waiting to buy the Nasdaq from this support area of 23,824. You can call it a demand area of 23,824. From here, I will buy TP1. I'll just target the next resistance area around this area. This area will be a good one, 24,637. Then maybe I can keep a TP2 here, because the Nasdaq, these are stock that people likes to buy. Once they get some discount, they load it up. So I'll take out my TP1 at this point, move stop loss to break even, and allow the TP2 to run to this next supply area. So for Nasdaq, I'll be waiting for price to come to this point. I want to buy from here. Then TP1 will be around here, then TP2 will be here. But there's still something that you can still take advantage of. I'm still expecting this price to come back down here. You see these guys here that started this move, they are still in charge of this market. Not to talk of this 200 EMA that we have here. This is a 200 EMA. It will be acting as a resistance. So if I get an entry at this point, let me just even take a Fibonacci and let's see. We'll take from this point to this point. We can see 61.8 is right here. right here. You can see. So if you want to sell this if you want to continue with this sell, if you want to continue with this sell, you can wait for the market to rise to hold on a second. So let me remove this Fibonacci. You can wait for the market to rise to 25,396. You can wait for the market to rise to 25,396, but you have to be careful, guys. You have to be careful if you are shorting this market from here. If you are shorting this market, you have to be careful. You have to be careful. Yeah, you have to be careful. So, but I can see that the sellers, this is their target. This is where they are coming to. But they got here because a lot of their support areas there. The buyers came in and they took the price all the way back up. But this is where they are coming to. So, if the buyers are not able to close above this resistance areas, to close above this area, whatever that happens, guys, whatever that happens from here to this place, these guys are still in charge. The sellers are still in charge. So I won't be surprised if they come back in and take this price all the way to the downside. If I get a clean entry for sell, I may sell this market from here, but from this point is a clean buy for me. My main target is to wait for the Nasdaq to still fall to 23,835. From there, I'll be looking for my buy signal. If I get a clean sell signal here, it must be very clean for me to go in. I may go in from here. So guys, you have to be, you guys, please be careful if you are looking at this market, because the market is a very dangerous place. I will not lie to you. The market is a very dangerous place, so you have to be careful whatever you are doing. This is not an investment advice. This is just an educational content. So please, be careful. So for Nasdaq, I'll be looking to buy here. But if I see a clean sell setup, I might take a clean sell setup from this point. So guys, yeah, thank you.